Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, as well as our co-host, Viriatis, we're very pleased you have joined us for our next live presentation from enCore Energy. Before I introduce our speaker, a few points to note. Please submit your questions in the question box at the bottom left of the slides. Once the Q&A session is ended, don't log out. You will automatically be transferred into the enCore Energy booth, where you can continue to ask questions via chat and access additional shareholder materials. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome William Sheriff, Executive Chairman, and Paul Goranson, Chief Executive Officer of enCore Energy Corp., which trades on the OTCQB venture market under the symbol ENCUF and on the TSX.V under the symbol EU. Welcome, William and Paul.
Thank you. Thanks for having us. I appreciate the opportunity to, along with Paul Goranson, give you an insight into the company. I'll be beginning with the overview, and then I'll hand it off to Paul for more of the technical aspects of the individual properties. enCore is a name that perhaps is unfamiliar to many of you, but we've been around for over a decade. And as you can see, we plan to lead the consolidation in the U.S. of in-situ uranium production. We'll be making forward-looking statements and a bit of background on the company. Here you see a timeline beginning in 2004 at the bottom, up until the current and beyond at the top of the screen. We have a very good pedigree in the uranium industry. A good number of the team have come from from Energy Metals Corp., which was formed in 2004 to pursue uranium in the U.S., which is still the world's largest consumer of uranium for the nuclear power industry. We consolidated the sector through a series of 5 acquisitions over 30 months, running from 1.7 million market cap to 1.8 billion in 2007. Shortly after listing on the New York Exchange, we were purchased by Uranium One for $1.8 billion. Went on to serve on the board of Uranium One as a member of the technical staff moved on to Uranium One for the operations. After a few years, we left Uranium One to start enCore Energy, unfortunately right before Fukushima. So we got started, raised some funds, and then went into a hiatus for a decade. At the same time, on the right side of the screen at the lower bottom, you can see Paul Goranson's pathway to joining us. In 2004, he was with Mystania Uranium. 2005, they elected to go into production, designing, building, and operating the Alta Mesa facility, an in-situ development in Texas. This took less than a year, 10 months' time from construction until production, and at a cost of just under $12 million US, under budget, under time, and a real testament to the skill set in building and operating the mine. That mine continued operating through 2014. Paul left in 2010 to go on to Cameco Resources as president. And then 3 years or so after that, he left to build the Nichols Ranch ISR mine in Wyoming, which was part of Uranex, later becoming part of Energy Fuels. We got together last year when we conducted a worldwide search for a chief executive officer, realizing that the industry had changed and was progressing quickly. What had been headwinds had turned to tailwinds, and now we have secured our first transaction at the end of last year with Westwater Resources, which gave us 2 of the only 11 licensed plants in the U.S., those being in Texas, and some historic resources there, as well as a very, very large set of resources in New Mexico. And Paul joining us, we've been refitting one of those plants and should have it up to stuff in the second quarter of the coming year. We're under $1 million, and it'll be fully operational. This time we'll begin commencing work on the well field and look for production in 2023. In the meantime, we had obviously the continued appetite for additional additions to the company, and that's where Zarga came into play. So where we are is we had short-term turnkey opportunities in Texas and long-term vast resources in New Mexico made possible by not only our own existing resources, but those that came with the Westwater acquisition. What we were missing were those middle pipeline projects, that is the 2-year to 5 or 6 year time frame. And that's why Zarga fit the company so well, fit like a glove in terms of that, bringing us the Dewey Burdock project in South Dakota and the Gas Hills project in Wyoming, both of which are advanced in-situ deposits, and they fit very nicely into our timeline of looking at new production opportunity in 2023 with Texas 2024 and 25, respectively, with South Dakota and Wyoming. We're combined measured, indicated, and inferred resources of 99 million pounds, of which 90 million pounds are measured and indicated. We're well positioned, obviously, to benefit from the nuclear renaissance, which is being fueled in large part by the green energy movement and the carbon awareness. We also are one of the few companies with proven management in the industry and the depth of talent, especially directed towards the in-situ aspects of uranium production. Sort of a quick summary of the companies. Right now we have $20 million in cash. That's a Canadian figure, a market cap of between 500 and 550 million, here again Canadian. We also maintain an inventory of physical uranium, currently at 100,000 pounds. It's varied between 0 and 300,000. We have a company policy of maintaining at least 100,000, which will ensure an orderly transition from startup of our plants to commercial production. That is, we want to make sure we can honor the early month contracts during that startup phase. Here you can see an overview of the U.S. Here again, we are focused entirely on in-situ in the U.S. From north to south, you can see the Dewey Burdock project, Gas Hills project, and then the New Mexico assets where we have quite a large number. And then, of course, Texas, where the initial production will start. The real takeaway from this slide is the last bullet point. Texas and Wyoming are agreement states, and what that really means is about a 50% timeline in terms of permitting. The term agreement state means that basically the federal government has ceded their regulatory oversight on projects and their permitting to the state. And in doing such, these states have to meet rigorous requirements, but more importantly, they're very familiar with the in-situ process, very familiar with the uranium licensing, and by virtue of being only a one-window licensing, it speeds up the process rather dramatically. So those are obviously the key states to be in, and obviously where our production's anchored. For those of you that aren't familiar with the in-situ process, it has some real key benefits over traditional mining, where you have an open pit or underground mining, and you take the rock crushed up and run it through a mill for recovery of your product. In in-situ mining, you inject oxygenated water into the aquifer that has the uranium in it. This strata is capped by an upper and lower clay or aquitard to keep the fluids from flowing out of it. The oxygenated water dissolves the uranium, takes it into solution, is pumped to the surface where it's run through a recovery plant, very much like a conventional water purification plant that you'd see in any city. Here you have ion-selective resins that attract the uranium and remove it from solution. That water is then refortified with oxygen and the process repeats. The key advantages are obviously there's very little surface disturbance. Nothing on the order of open pits, tailings dams, tailings ponds, none of this. So your permitting is much quicker, much cheaper in terms of very low capex. You can traditionally be looking at one of these facilities and well fields for in the order of $30 million US versus a capex of a conventional mine of at least an order of magnitude more, sometimes two. And the other obvious or not so obvious benefit is it uses considerably less water than a traditional mine. That water is returned to the strata once the operation is complete. And as you may have guessed, the reclamation obligation is considerably less here in terms of being able to return it to its state prior to mining. So all in all, it has operational costs of about 15% of conventional mines. And that is the way the lower grade deposits can compete with the very high grade deposits found elsewhere like Athabasca. Excuse me. uranium is not a particularly rare element. It's the 8th most common element in the world. So what really is in critical short supply is the technological expertise, that is the people or your team. And we boast one of the best, if not the best team in in-situ recovery. I've already gone over Paul Goranson's illustrious career. I'd also point out Dennis Stover. Dr. Stover was one of the 2 originators or original patent holders on the in-situ process. Formerly our CEO, he's now our Chief Technical Officer and provides a wealth of information and assistance in terms of design and operation of these plants. Richard Cherry, 40 years in the industry, mostly with General Atomics, is also an expert on contracting the material to our end users, which of course are the nuclear utilities. Mark Beliza, another 40-year expert in in-situ. He spent about half of that in permitting and the entire time in operations. I'm not going to read all of these to you. I'd be glad to answer any questions about them. During the Azarga merger, Blake Steele will join us from his residence in Hong Kong, where he will be our Asian liaison, if you will. Tremendous interest in the industry in Asia, and his contacts there are invaluable. Also mentioned Sandra McKay, who will be joining our board as the Azarga nominee. She is a natural resource lawyer, spent 10 years in Canada as lead counsel for Chevron Canada, and then another 10 years in the uranium industry. So in addition to these people, we've got about 26 people in the field, geologists, technical experts, operating engineers, et cetera. So we've got a very well-rounded team that has been hand-selected to fulfill our mission. I won't read these to you either, but I'm sure you're aware of the growing support for nuclear industry, not just in the U.S., but around the world. And echoed no better place than in the U.S. Congress, where I think it's probably the only thing that the 2 parties agree on, and that is the need for additional nuclear energy. First time in 5 decades. And that's why enCore is really, really optimistic that what we're looking at is a decade or longer time period for this nuclear renaissance, the most fertile environment for nuclear power since pre-3 Mile Island, which was in the 1970s. So our company has been designed for this production for, looking at the long term, but beginning very quickly. Just to give you an idea of the growth in the nuclear industry, you can see all the graphs you want, but there's basically 55 million pounds of uranium being burned every year that are not being replaced by new mine supply. In addition to that, there's greater than a third of the current nuclear fleet being planned in terms of built or constructed as we speak. Areas of the globe that you see specifically high growth in are China, the Middle East, Russia, India, of course, Japan reactivating, and another significant area are the former Soviet republics in Eastern Europe, really concentrating on nuclear restarts. It is the only real answer that's presently available to deal with the carbon emission issue. With that, I'll turn over the discussion of our assets to Paul Goranson, our CEO.
Thanks, Bill. I'll get started real quickly, focusing on Texas, which is our near-term target for production. As Bill mentioned, we acquired the uranium assets from Westwater Resources, which included Rosita and Kingsville Dome, which are licensed facilities down in South Texas. And we've got also the Butler Ranch Exploration Project, and we're also developing another project that's relatively new called the Upper Spring Creek Development Project. So we're moving pretty fast in Texas to meet that timeline of being in production by 2023. Texas is a great place to start, as Bill mentioned, about the agreement state option, but it's also very business friendly. And there's a lot of upside and potential in South Texas because of there's a lot of mineral resources that haven't been discovered or are known about but haven't been mined due to the various ups and downs of the uranium industry. Drilling down onto our near-term production strategy, it's focused on these 2 central processing plants that exist down there. Both of them have been relatively recently upgraded. Kingsville Dome back in 2005, where it operated as a central processing plant for a couple of satellite facilities in the Kingsville area, as well as out at west of Kingsville near Heavenville, Texas. And it operated through 2009. Rosita was upgraded initially back in 2008, and it was never put back into production. We're advancing Rosita right now to bring it into production capability. Both these facilities combined have a production capacity of 1.6 million pounds per year, and that's really an equipment limitation, but we can expand that relatively quickly for a relatively low cost when the production is needed. And so we're maintaining these facilities and we're advancing some other projects to begin so there'll be feed for these projects. Namely, starting with Rosita and our Upper Spring Creek property. We'll be operating those as satellite facilities. As you can see in the lower left-hand picture, we already have existing satellite equipment that we can go out. We don't need to go source new. We can relocate those for a really low cost, and that gives us an edge up on some of the supply chain issues we've been hearing in the press. The other thing we're doing right now is we're also going through the Butler Ranch exploration project with a significant number of drill hole information. Look at moving that from a historical mineral resource into NI 43-101 standards, and we're advancing the license. We're doing a license amendment and some permitting for Upper Spring Creek. It's already been previously licensed and permitted, never operated, but this is a relatively fast track of to get that one into production by 2023. So that's where our focus has been. And there's additional upside. We're continuing to acquire additional properties to expand our production pipeline and extend it in South Texas. Dewey Burdock comes to us through the Azarga transaction. It's located up in South Dakota, and it's an advanced project. It's fully licensed. It's got all its federal permits in place, and it's currently going. There's some additional licensing work permitting work has to be done with the state. It's a project that it's a relatively high grade for an in-situ project, significant resources. As you can see from the next slide, it has rather robust economics, which means it dovetails nicely into our production targets, starting in Texas, moving to Dewey Burdock. And then during the time we're developing Dewey Burdock and operating Texas, we'll begin preparing the licensing and permitting for the next one, which would be Gas Hills, which is located in Wyoming. As Bill mentioned earlier, Wyoming is a very favorable district for mining or state because of the fact that it's mining friendly, and it's also an agreement state. And this is a project that's effectively located in a brownfield area and with lots of infrastructure. So we should be advancing that one. As soon as we close the transaction, we'll begin doing the work to begin advancing that project. And as you can see from the economics of it, it still is relatively robust. Currently, where current prices of uranium are, it remains a very good prospective project going forward. And like I said, like Bill mentioned, it really fits our timeline for production and pipeline. Going on to New Mexico, which is our what we see as long-term production source. Mexico's got huge known uranium resources and a whole lot of unknown uranium resources that haven't been identified, but we have control of in several areas. And with the Westwater transaction we completed, we were able to bolt that onto our existing properties we held and created the dominant position for uranium production in New Mexico. And with that came several projects that fit right in. There's a lot of in-situ recovery targets, and granted, there's also a few conventional targets, but we're prioritizing our ISR, and we see this as being the long-term future where we expect additional significant mineral resources to be added, and it creates a rather significant long-term endowment for enCore. When we talk about New Mexico, the first project we expect to actually begin developed and operating is Crown Point Hosta Butte, which is an ISR operation that's fully licensed. It's partially permitted. It is a unique animal within the enCore group, is that a portion of the resources and the license are held by another company named Laramide. We look to work with them to develop these projects, but once they make a production a development decision, we intend to be part of their conversation. And that project has got substantial resources, and like I said, it's licensed already for ISR production. And as you can see, our goal is to build the premier ISR uranium company in the United States. With the Azarga acquisition, we've been able to build what I could see as an advanced development profile. And we've also added, with the Azarga transaction, even stronger, built up our management team to be able to have something that's going to be what I see as a leader in the industry. And we've got this, with all our projects in Texas and across the Mountain West and principally in New Mexico, we have a long-term plan with a robust production pipeline, all coupled and leveraged off the two existing facilities in Texas as we carry the plan forward. And we're going to continue to look at other opportunities. We see this market as in need of, still needs to do further consolidation in the United States, and we continue to look at our options with respect to that. And with that, I'll turn it over for questions.
Thank you, Paul. I've got several questions here. I'll take a couple of them here and then pass a couple off to you. There's been a question asked regarding, a couple of questions asked regarding timing and certainty of the Azarga transaction. I'd point out that the voting date is November 16th. The circular is being mailed this week. Obviously the process is quite advanced at this point, having already gone through or entered into CFIUS review, NRC review. There's a number of regulatory reviews required for any merger in this industry. Is it possible that an intervener could come in? It's always possible, but obviously there's a number of factors in the agreement that are set to certainly discourage that. And I'd point out that this fit is so perfectly fit for the two companies that it really makes a great deal of sense for both parties here. With their good properties that fit right in the middle of our pipeline, it just couldn't be much better for both. And of course, with our deep ISR experienced staff, we've got the ability to take those projects and move them forward. So I think that pretty much covers that. Paul, this question's for you. We have a question asking for an estimate of all-in costs on the Texas operation.
Well, thanks, Phil. I'll answer that kind of with a little bit of plus or minus a little bit here. We estimate to be the production costs, all-in sustaining costs for our Texas operations around the mid-30s to between $35 and $40 per pound, closer to the $35 per pound. And I say that because we actually haven't done a PEA on this, so there's nothing out there that's public that we can point to show those numbers. But I've got our team and myself have quite a bit of experience working in South Texas with the very particular deposits that we're looking at or we're actually advancing. And so we got a pretty good handle on what those production costs are. And so that number is a reliable number. I know it's a bit of a range, not a specific number, but I think it's reasonable, particularly in today's market. It certainly has incentivized us to accelerate our activities. With that, Bill, what's the next question?
Thanks, Paul. Here's one that refers to what our relationship is with Laramide and what type of targets we might be looking forward to, and in terms of our continuing merger and acquisition strategy. And I think that one's pretty easily not answered or answered in the following way. Our timeline's complete. Our objective is get to be a 5 million pound a year producer, consolidating much of the ISR industry in the U.S. As such, we can do that generically with the projects we have in the pipeline. Obviously, we're continuing to evaluate other acquisitions, but our priority certainly is on things that would accelerate that timeline to get to our 5 million or more pounds of production. And any acquisition beyond this will have to be something that's very opportune for us and highly accretive. The next question would be, what are our key milestones post-acquisition? And I'll just mention a couple, and then, Paul, you might go into what we're actually doing on the plants and the wellfield timing and that sort of thing in Texas. But in general, we have a very large number of historic resources in addition to the almost 100 million pounds of 43101, all categories. And so we are going through systematically and taking a few of those resources at a time and updating to 43101 status. So you will see those come along, and you'll obviously see the integration of the merger come along in terms of milestones. And Paul, you might have a few others to mention there.
Sure. In addition to advancing our current projects that we have in development right now, we'll also be looking to add additional projects in South Texas through property acquisition, through leasing, and or possibly purchasing that we're currently working on right now, and we've advanced those discussions pretty significantly. In addition to that, we'll be also advancing the permitting process for Dewey Burdock. That will be something right outside. Once the transaction is closed, we'll begin that effort right away, at least from an enCore perspective, and also immediately begin the preliminary work for the Gas Hills, Wyoming project, because that's going to take a little bit of permitting to do. One of the things we didn't bring up during the presentation is that we talked about New Mexico being on a longer-term production pipeline, and that one of the reasons why we say longer term is because it's going to require a little bit of work to bring it into development. And that's really centered around the fact that there's a rather rigorous, much more complex regulatory system in New Mexico. In addition to that, there are issues with the local communities that have been impacted by historic uranium mining. And we believe we have to do quite a bit of work there. And one of the things we'll be doing post-closing merger is spending quite a bit more, putting more resources into New Mexico to begin building those community links, ties, particularly into the tribal communities, to help bring in an opportunity for them to basically, hopefully participate in what we're doing to advance these projects. We see that as the long-term goal, and help strengthen our social license working there. And we also, some of the other things we're doing is continue to the properties we acquired in Texas, the ones that have existing liabilities, continue to reduce those liabilities also. And that's ongoing right now as we continue to advance our other projects.
Yeah, I think we have time for one more question here, and I'm going to address this. It's sort of a local question, but it really goes to the market of uranium and the fact that while our customer base is in the U.S., it is truly a global commodity. Question being the effect of Tesla relocating to Austin, and whether that's going to have a significant impact upon our business. And, in a general sense, yes, obviously it's going to be, an increase of use of electricity. Over 50% of the green energy produced is from nuclear. That's going to go up considerably. The electric vehicle movement is currently going to require, a considerable increase in electricity over the coming years, of which we see an ever-increasing percentage of that being nuclear. Specifically in Texas, no, it's not a direct effect, but in a general sense, it's very much an effect for us. And, everything is truly a global market. So, uranium prices in the U.S. are going to fairly closely monitor uranium prices elsewhere, and a big significant increase in demand one place is going to be shown other places. And, even outside factors, which we really haven't even touched on during this presentation, but in the last minute, I will address the influence of the financial institutions coming in and taking uranium out of the supply and banking it in their funds, such as Sprott. Huge impact in the immediate pricing. It's certainly been something that's on the nuclear power company's radar, and even more so with Kazatomprom, one of the world's largest suppliers, now getting into the financial funding business as well. Certainly something to take note of. All of these are very positive tailwinds for the industry, and we look forward to a very dynamic, exciting decade for the industry, with enCore leading the domestic in-situ charge. So I want to thank you all for your time and attention and lively spirited questions. If you have any more questions, feel free to call us direct or email us at the information shown on your screen. Have a great day, and thank you.